Hello and good afternoon. Welcome to our live event. My name is Matthew McCoro, and I'll be your host and your guide and your coach for today. Looking forward to break down the opportunities that are right in front of us. We are always here as a group closely monitoring the latest swings in the market, and we just got done with a training class earlier this afternoon and getting closer to a decisive next move, and definitely looking forward to walking you through how you could participate in that. We're going to be going through a straightforward yet powerful way to identify where the money is flowing in the market and then how to trade it all the way down to a complete trade where you have the symbol to trade, what type of strategy. You'll know if you want to trade the option, what strike price, expiration to select, and also how to manage the trade end to end with stop losses, profit targets. So we'll jump into that here. Obviously, that's the main course, but let's go through some of the simple housekeeping items before we hit the ground running. And the first thing I want to do is just make sure that everything's working with the audio and video. So at this point, you should see a slide. I'm sharing my screen that says sound check on it. If you can hear me and see that slide, then please go to your question section and say hello. And then that way I know that everything is coming across with the technology properly. And I'll see your response. So Bill, C, I've got you. Thank you, Vicky. Appreciate it, Ruiz and Hamilton. Tao, good to see you. Oh, now you're in Hong Kong. Awesome. Good to see you here. I know it's late for you. We've got Gio and Mandy, Werner, Charlie S, Bill W. Okay, so it looks like we've got all working. Thank you, Phil. All right, so I won't go through everyone's name. I don't want to sound, over the top reading all the comments, but I just want to let you know that I can hear you. I can see your comments. This is live. This is not pre-recorded, so you'll see in a moment when I get to the charts how live it is, because you'll see today's action in the market, and then we're going to be looking for trading opportunities today. And in fact, I saw a couple before we started. Now that the market is closed, the bell has rung. It is now past 4 o'clock, and this is when I start to trade, is once the day is over. So I'm going to walk you through that process, of course. So now that everything's working and up and running, let's just go through and set the focus. So what we're going to be doing is talking about how to combine momentum with the right direction or trend patterns in a straightforward and repeatable process. So we're going to be using a lot of objective data, so math-based data, right? Where the formulas really don't change. Formulas stay the same. These are math-based criteria. So there's very little subjectivity to the process I'm going to share with you today. And in my experience, it makes it easy to teach to a concept when we remove subjectivity from the equation. We can't remove all of it, but we can do a solid job getting rid of most of the feeling-based, opinion-based decision-making in the market. So this combination here, I'm going to show you several different methods of trading it, but it's really one overall strategy. My goal, and you'll learn about my experience in a second when I give you a quick background on myself, is that I've got tons of real world experience, both trading, but more along the lines of also teaching this market in this same process that I'm going to share with you today. So it's one overarching approach, one method, one overall template. And then from that one base template, it doesn't matter if you're trading stocks, trading options, futures, Forex, even cryptocurrencies. If you can chart it, then you can use this same method I'm going to share with you today, regardless of what type of market and what type of symbol you're looking at. ETFs as well, small caps, large caps, mega caps, over-the-counter penny stocks. It's irrelevant to the symbol as long as we can chart it. Then I'm going to show you how to apply this overarching strategy. It's a combination of momentum and trend patterns, very simple trend patterns, but combined together, it can tell the complete story of not only what's happening, but also more importantly, what to expect next. And that's the goal of any type of analysis, is trying to understand where the probabilities are so we can have an expectation, right, of what's next. So that's what we're going to be discussing today. And I'm going to be giving you full roadmaps, full step-by-step checklists. Everything on my charts will be fully viewed. My charting template will be viewed. Nothing is hidden. Full transparency is my goal. But this is the type of setups that we're going to be going after. This is a trade from Lyft. This is a few weeks ago. But this is a setup that presented itself to us using the method I'm going to share with you. And we bought the long call and made the profit trading the option. So we bought down here at the reversal point and traded it all the way up to this $16 mark. We didn't buy the stock, we actually bought the option. And that was over 100% profit in that time, but I'll show you how we get to that point. My goal is to give you the actual formula to find stocks at this moment of time that are precursors to the next big move. Doesn't matter if it's green or if it's a red movement. Okay, this is a short on Pepsi, where we saw an opportunity identify with a fast snap down. That's a technique of finding something that's overbought, coming to an end, and then taking advantage of a fast move down. So red days, green days, you're going to be able to see with one template how to identify what's going to happen next. And I'm going to give you search criteria. So in fact, you don't have to do all this legwork. You know, for me, I'll explain more about my background, but I don't have hours and hours available for me to just stare at my charts all day and analyze and analyze and analyze until the sun sets. And for some of you, you go beyond the sun setting, right? I found that if we can have an objective approach and be able to zero in a repeatable format, I'm going to give you search criteria that you can use on any scanner, stock scanner of your choice. Input the settings, save it, and then you've got an ability to find stocks that are poised to move, poised to break out. So it's not something that takes hours a day to figure out, because we're letting technology do the heavy lifting. So I'm going to talk to more about results, what's happened recently in a moment, but I do want to make sure that everyone has a focus of what we're really here for, right? We're here to either to learn how to make money. Maybe you haven't reached the pinnacle of success in your mind yet. You haven't hit the end goal in mind that you've set forth for yourself in trading online. Or maybe you're actively trading, but you're looking for some additional help, additional tools to get you over your current maybe ceiling of potential. Okay, so, but when you sum it all up, to me, it always comes down to be able to make money online. So I'll go into more of the results as I get into the process. But before I get talking about trading and things like that, and talking about opportunities, both past and future, is going over the simple disclaimer. If you've been in any online event before, then you've seen this. Trading in the financial markets carries risk. You can lose a trade, okay? You can also lose your entire account, right? You can blow your account is how some would describe it. So there is risk associated with investing online. So always use risk management, always use risk capital. In simple definition of what that is, that means that if you lose it, you can still put food on the table and keep a roof over your head. I think we're all adults, but this is something I have to put out there anytime I talk about past and future opportunities of profit. So let it be known if you didn't know it. But I know, like I said, most of you are already keenly aware of that fact. You're going to hear me use the term simple and repeatable, and that is a goal of mine, and that's something that I've focused on in my career, of providing something tangible, something that you can print out next to you, that you can follow on your own or with guidance, a strategy that is repeatable, that it's clear and simple to not only look to the future on how to apply the strategy, but to simply and quickly go back in time and see with basic charting, knowledge. You don't need to be a master chartist to run the strategy. You have to just learn some simple relationships that I'm going to share with you today. And the goal is to be able to repeat it, right? Repeat successes, and of course, avoid repeating mistakes. Today, I consider this type of event more of a workshop. I've been hosting online webinars like this since 2007. In fact, when I explain my background, I was hired by a company to be an online coach back in 2007. That was my first steps into the financial markets. So I like to teach rather than be on a PowerPoint slide all presentation and talk about trades that were months and months and months old. I'm going to be talking to you about what's happening right now. And I'm going to give you full disclosure on every tool I use, every step of my process. And by the end of this event, as you stick with me through the next hour and 20 minutes or so, you're going to be able to walk away with a model that you can apply yourself. Most of the people that show up to an event like this, by the end, you're probably about an 80% proficiency level. If you've been trading for a year or more, then you could probably get up to that 95% confidence level in how to apply the strategy today. So it's on purpose, right? It's on purpose that this is simple. If you're looking for something complex that's going to take you months and months and months to figure out, this is not the event for you. I have nothing against highly complex strategies if they can work for you. My goal is to help you find a solution to what ails you, right? It's the only reason you would show up to an event like this is to learn something new or to add to your current trading tool belt. And that's my goal, is to teach you as much as I can disclose in the next hour and a half with you. And if you like what you see, then you can get more of me if you like. Right? So it's simple and easy if you like what you see, but we'll get to that later down the road. So with that being said, many of you I've met before in other online events or even in some of my live events in person. But for those that I haven't met yet, my name is Matthew McCoro. I've been in the financial markets, trading, teaching, coaching since 2007. I was actually hired and paid to become a master trader in this market as an analyst and as a teaching coach back in 2007. At the time, it was one of the largest financial education and trading technology companies. They specialize in trading currencies. So I learned and earned my chops in the financial markets in a highly technical driven market. And technical meaning your ability to read charts, your ability to analyze charts using various manual analysis like trend lines, support resistance, to advanced candlestick formations, to Fibonacci number sequences, and any type of indicator you've heard of, I've used and deployed in the market, both as a teacher as well as a trader. With that company, I was under the sales and marketing umbrella, and in my career, I ended up moving up to the second in line of the second in command as the chief revenue officer. So I had unique access to not only the trading market from a trading coach and product development team, but also under my purview as the chief revenue officer was the product support team and customer support teams. And so the access I had to the obstacles that traders face is tremendous because we had thousands and thousands of traders all over the world, first-time traders, seasoned investors. And so to develop a fast-growing company and to develop a rapid growth plan, we spend a lot of time in developing products and services. So from charting services to trading signals to automated systems, indicators, education from basic all the way to hyper advanced, products that were $10 up to $30,000 product lines. So the only way to develop things like that at that level and at that breadth of support is understanding what clients face on a daily basis. But with that responsibility and with those performance indicators of always driving revenue, and at the time, this is back in 2018, at that time when I left the company, I also had two small children. They were 4 and 5 years old at the time. Well, just like any executive that you may have experienced, or maybe if you're a former executive yourself or an active executive, you know the type of time that type of role eats up in your daily life. So I would be able to kiss my kids good morning, and then by the time I got home, I tucked them into bed and kissed them good night. And so with the stresses of always searching for the next dollar, always creating new products and services, because that's the only way you can really grow revenue, is have something new all the time. That pressure, tackled with the fact that I was missing out on some of the most valuable times that I'll have as a father, I decided to step away. In 2018, after about 6 months off, I decided to jump back into the business because it's just a market that I grew very fond of. It's been a passion of mine ever since. I love coaching and teaching, but I didn't want to do things the same old way that I've done in the past. I didn't want to have an army of people. I didn't want to have all the sales teams managing all the sales activities and then managing a huge marketing budget to drive traffic. So I had to come up with a new way, and I decided to partner with some phenomenal people that I've worked throughout my past experiences and created a team and created Concordia Financial Exchange, the company I represent today. But we had to do things differently. And so what you're going to see today is the output of all of my previous experience in developing products and teaching, coaching, mentoring, and really a one approach to the market strategy. And so the strategy I'm going to share with you now is one that can help you forecast the future, right? Analyze what's happening, understanding what to expect next. And then it can also act as a new trade or finding a new opportunity to invest in that moment, right? In that go moment situation to find a new trade, right? So you can take a look at a trade you're in now and understand, what's coming next. And then what's also important is that you can also use the same strategy, the same template to find new opportunities, right? And so that's what you're going to see today is a culmination of all that experience rolled into a one base template approach that if you like this process, you can expand it to a multitude of different ways, right? But I'm going to show you the base approach today, so that way you can walk away with an ability to find the next breakout opportunity. And I'm going to show you that at this point. So what we're going to do is I'm going to get out of the slideshow. After talking about myself for so many years in this introduction, I just like to get to the charts and get down to business. So if there's questions, let me know on this. I'd be more than happy to answer them. But I think at this point, let's get down to the fun stuff, which is actually jumping right to the market. So what I'm going to do is I'm going to be pulling up my charts here. This is TradingView. If you're not familiar with it, it's just an online charting platform. Now, what I'd like to do is to get some participation from you all and make today's event more specific to your wants and your needs. And to do that, I want you all to now give me your one or two most interested stocks to break down today. So we're going to create a list, a watch list around you today. I'm not going to pull up some canned, pre-articulated, pre-built out, lists. We'll get to that later because it's going to be simple to get to. But I want to see what you're most interested in. So at this point, type in your symbol of choice. Give me the symbol name. It's easier than just the company name. And then I'll create us a list that we'll use to walk through the strategy. Now I'll explain more of the template here in a second. I know you're gonna have questions on it, and that's what I'm here for. So everything here on this template is wide open for you. I'm gonna just minimize and hide and just get rid of some of the tools just so we can see more clearly. But I wanna use your list. So I'm gonna create that now. So let's go. We've got Disney, we've got the NASDAQ, we got ALB, Meta, is that CL, Irene? Is that what you're asking for? I'm going to assume it is. So futures. If you tell me different, that's fine. Let's see. We got Tesla coming in. That's common. We got, let's see what else we have. General Motors. We got Amazon. I like that. Oh, CI. Cigna. Okay. I got you there, Irene. Gotcha. Enbridge. Suncor. I like the 5-letter symbols. ILAG, AMLX, a pharmaceutical company like that. Okay, we got Microsoft. All right, so if you've got more, maybe you're typing slow, that's fine. I can add them to the list. All right, so we've got a good start here. So let's go in order. Okay, so let's start with Disney. First one in the line. I'm gonna walk you through the template in the top left corner. Okay, so this template here I use 90% of the time. The time I'll move off of this template is if we're looking at more of a longer term trade, longer position. If you're looking at, for my traders, if they're looking at adding to their portfolio of owned stocks, right? So maybe they're looking for new stocks to add to their, investing long-term portfolio. We'll run a different model, a different sequence, okay? But this model here, the indicators I'm going to walk you through, and let's do this. If you're already familiar with moving averages, just bear with me a few minutes. Some people in a room like this, they know what they are, but they've never seen them really used. So I'm just going to go through a basic walkthrough of, what is on the chart now. Now, like I said, this is TradingView, but nothing on the chart here is proprietary to TradingView. One of the big product lines that we sold a lot of is charting software. And we had software that was $20 up to, hundreds of dollars a month. So I've been a part of product development across all sorts of different technology. And one of the things I've learned is that I wanted to find and develop and teach a strategy that did not require massive overhead as far as additional tools and resources. And so one of the big cost and overhead beasts to bear, burdens to bear, is software. Because every dollar that we invest that's not directly related to making money, right, is an overhead to this business of trading. And could be education you buy, could be trading signal services, and it could be software, are some of the big three, costs that retail traders face outside of, trading costs, right? The cost of actually placing a trade. That's always going to be there. And so for me, I've always found that if I can help offset some of the costs of doing business, such as software, then I'm going to do all that I can. So to give you an idea, with TradingView, I use the Pro version, which is $15 a month. And the only reason I do it is because of the ability to have unlimited watch lists. For many years, I just used the free account, which is available with TradingView, is you can just have a free account and you can run this entire strategy without paying a dime for it on the software costs, which I find obviously very nice to not worry about additional overhead. So these indicators can be used on any software of your choice. They're nothing, once again, nothing is proprietary to TradingView itself. So the combination here is we use 3 trend lines, 3 moving averages at once. There's a 10-day, a 20-day, and a 50-day. So if you have an understanding of technical analysis, this is giving us 3 different time frames of trend, a price trend on one screen. The 10-day is our inner trend line. Then we have our 20-day, which is our trend line, shorter term trend. And then we have our 50-day, which acts as our long-term trend. Now it's set to a daily time frame. The chart I'm on is a daily chart. This is where I spend the majority of my time, is on a daily. And it fits my lifestyle. If you recall, now I've got an 8, 9-year-old, and my goal in this career of mine is to be available and to spend as much quality time when necessary with my children. So I pick them up from school, I drop them off at school, I coach my son's baseball team. I'm my daughter's #1 cheerleader when it comes to her competitive cheerleading. Okay, so I'm always focused on making my business and my trading around my family life. And so that's why I trade up daily charts, because I trade, as I said when I started the event, when the market closes. So I'm always looking at what took place, what new pattern presented itself today, to set up for tomorrow or set up for the next day. So Sunday night, I'm looking for Monday. Monday night, I'm looking for Tuesday. Tuesday for Wednesday. Wednesday for Thursday. And then Thursday for Friday. And then I'm done for 2 days. So all of this is done at any point after 4 o'clock and all the way until 9:30 the next day. So it adds a lot of flexibility to the process. So what we look for is the relationship. So I'm going to start first with just breaking down one of these indicators for a second, and then I'll add the others in. So what we're looking at is the relationship between where price is versus where our trend line is. Now it's objective. It's a math-based trend line. There's nothing subjective about this. It's not an opinion. It is looked to as a fact of what just happened. So if we look to Disney closed at $110.36. Okay, I'm going to get rid of the aftermarket and just talk about what actually happened today. So $110.36 is the price that Disney closed. It's the most important price of any time frame is the actual close. Okay, so regardless of where it opened, how high it went, how low it went, where it closes is ultimately going to be the most important price for us. So what I'm looking at now is what is the 10-day average price. So this is our inner trend line. It's our closest trend line to the price. To see the data, you can always see the price of that trend line in that top left corner. So right now, based on today, the 10-day price is $110.26. Well, the close price is $110.36. So the objectivity here is, did we close above the 10-day price? The answer is yes. Okay, it's a yes or no. There's no almost, there's no sometimes, there's no close enough, right? It's either yes or no, and that's objective, right? And that's what this whole process is based upon, is a objective approach. So from the trend, right, what does that tell us? Well, that just means that over the last 10 days, the price is still trending and is above that 10-day. Well, as I introduce the longer ones, right, there's the 20-day. Okay, so that becomes the mean. The 20-day price is the middle one. Well, we're also closing above the 20-day price, which is $106. The 50-day, which is our longest term trend line, well, the 50-day average price has been $97. So at this point, though it is within a few pennies, right, we're above the 10-day, we're above the 20-day, and we're above the 50-day. Now your 50-day time frame, because it's our largest on the charts, it's about 2.5 months worth of an average, right? So it's a simple average. It's not exponential, it's not weighted. It is a simple moving average. Okay, so it's a simple formula. You add up the periods in this 10-day, it's the last 10-day close price, divided by 10 gets you an average price. That's what the formula is. Now you can use it more advanced indicators, but as long as the averages are all the same, then you can apply the strategy. But once again, I focus on simple things that are commonly used, commonly discussed, and have a long tenure of usage in the markets. And these moving averages are exactly that. But we also are able to find historically where price was. And so if we look to our longest trend, which is the 50-day, what that becomes now is our overarching direction. So when we're above the 50-day, then we're in an uptrend. When we're below it, it's a downtrend. Now, the advantage is we're looking for where in a particular chart, in a particular time, where are the biggest opportunities? At what point does the market move more than other points, right? Other stages is another way to think about it. I always look to the market as being in a stage. What stage are we in? Are we in a active stage where the market's making higher highs, higher lows? Okay, that's an active trend. But what you're going to see is the distinct shifts in how big moves happen, right? I'm not looking up for 2%, 3%, 4% moves. I'm looking for double-digit moves in the market. What you'll see as I scroll out here is when you see reversals take place. And so what we're looking at is where in a particular point in time, do we get a change of that direction? either we're making lower lows like this period, right? We're making lower lows, that's a downtrend. We're below this long-term trend line, but then we change directions and we go from being down to now up. Then we come back to being down again. And then here recently, we're on the way up again. This point here is where the focal point is going to be with the strategy, is finding these moments of reversals to take advantage of the bigger percentage moves that occur around these events. They're called reversals. It doesn't matter if I'm talking about Disney or I'm talking about the NASDAQ. It doesn't matter if I'm talking about even futures contracts. We're talking about inflection points when there is a shift in direction. Regardless of what symbol, if it's a small cap, if it's a mega cap, we even have penny stocks. This is a 17-cent over-the-counter stock. You still see the same type of impact of trend moves in the market. Once again, we're going to be focused on these moments of time. They are objective, okay? It's an objective trend break, trend reversal point that occurs. And we can find them. In fact, it's mathematics. It's simple mathematics. We can program a screener to find these moments of time. We don't have to sit here and watch charts and wait for the moment to show up. We can actually just hit a few buttons and they'll pull up for us. It makes it pull up for us. Okay, so I'm going to get there. So I just want to put that out there. You are not going to have to sit here and go through dozens and dozens and in actuality, hundreds and hundreds of charts. We actually fine-tune the process. And so we get a very specific list of stocks at the end of every day that meet certain criteria that we ask to find. So you don't have to do this every day. You don't have to do this every other day. You can do this once a week. It just depends on how active and how much time you have. Okay, so it's definitely a, think of it as an on-demand new trade process. Whenever you want to invest, you want to get into the market, you're going to have an ability to find opportunities that are at a moment of breakout. Okay, so that's the first. I just want to talk that out, and then I'm going to show you how to get to the end result. Now on the bottom here, I'm going to introduce one of the biggest drivers in my experience, one of the most underutilized data points for retail traders, and it's momentum. Well, how do you define momentum? Well, it's volume. Okay, so on the bottom here is an indicator. It's called volume. It's a simple volume indicator. There's nothing fancy to it. It creates these bars. And if you're following along on TradingView, you have to change the style because by default, it's a line chart. We don't want a line chart. We want a column chart. Okay, so below here, I'm going to turn off this moving average for a second. So each one of these columns is giving us the trading activity for the day. Once again, it's objective. This is what happened today with Disney. There was 45.9 million shares bought and sold. This is both buying and selling. This is total volume, the number of shares traded. That's not buying, that's not just selling. Total transactions around Disney today. It's not dollars and cents, it's numbers of shares. So today, 45.9 million. Now that may sound like a lot, may sound like a little. To understand the impact of today, we need to have a basis of measurement. We have to compare it against something. Well, just like I talked about above in the moving averages, we're going to deploy another average down below. And we're going to use a 20-day moving average. So now we've got a trend line below as well. So we have trend lines above that help us identify pattern of direction. Okay, that's how we look to it. And then below we have an ability to measure momentum, when there's high momentum, when there's low momentum. Appreciate the comment. We got Mark says, I love how methodical you are. It makes it easier to follow. I'm glad you appreciate it. I really do. Makes it enjoyable when I'm not talking to myself. And that happens when I'm recording training videos or things like that. It's a lot more enjoyable when I have people to ask questions and interact with. All right, so we have now a way to measure, right? Think of it as an ability to see, how fast you're going, right? Imagine driving our cars without a speedometer, right? Imagine getting in the car, going on a road trip, and not knowing how fast or how slow you're going. Well, same thing here. We want to know what the speedometer is. What's the speed? What's the momentum around a specific stock? Now, once again, it could be an ETF, could be anything, right? Around any symbol. Well, now I think this number is going to mean a lot more, right? Well, today we had that 45.9 million, but the average has been just 14 million. So we're talking up over three times the normal activity today. What do you think that means, right? That means something is going on, right? That's a ton. That's 300% more than normal. Well, look to today. We had a massive red bar above. To see the real impact of that, I mean, we had a $9, so almost a 10% high-low move between where we opened. I mean, that's a massive bar. I'm just using a ruler here to measure how big the high-low spread was. 7%. That's a lot of movement. We started way up here where my cursor is. 118 was when we opened. Right? That was the price that the opening price was trading with Disney. And then by the end of the day, it came all the way back down to 110. Okay, so it's 8-point swing from the open all the way down to the close price, right? That's a big bar. That's a lot of activity. Well, look down below. Well, yeah, it's a lot of activity because there's a lot of transactions, right? That's a massive surge of trading activity. Look to these other big days. I mean, you had another big day back here in November, 70 million versus 18 million, right? You see how big these bars are. Well, then you also have periods where you have low volume. It doesn't matter what symbol you do this exercise with. You will see that on days with higher than average volume, you get a larger percentage high-low move. You get more price movement on days when you're over average than you are below average. I mean, everyone from an early age, when you learned about the stock market, understood the concept of how the markets work, right? More buyers than sellers, price goes up. More sellers than buyers, price goes down. Well, because that's an inarguable fact, right? I've yet to come across an argument that says different about how the markets go up and down on price. Well, what if there's way more buyers than sellers, like way more than normal? Well, prices are going to go up what? Fast or slow? It's going to go fast. Well, same thing on the opposite. When you have a lot of selling more than normal, right? Not only just selling, but at a very high level like today, you get a big bearish move today. I mean, in fact, even the day before, we had 27 million shares, but you see how small the high low is, right? Just go to the high and the low of the candle, the wicks, right? It's way less than what we saw today, but there was still a lot of volume. Now, when you couple the reversal points and there's volume momentum around the shift, okay, that becomes a momentum breakout pattern. I'm going to go back in time here and I'm going to rewind the charts. I need to go back one more day. And I'm going to show you now, once again, the base approach for identifying these breakout patterns. Number one, we've got to be able to identify a shift, a pattern change. So where I put the market now, which is right back here in the summer based on this move, this point in time is where we saw the shift from being below this downtrend line, right, the 50-day, and we saw it flip above it. So that checks the box for a pattern reversal. But what really puts fuel on the move is having momentum there to break out. Well, below, you can see that we had 15 million shares and the average was 11. So we had a surge above the average. So it's about a vertical approach of aligning the daily activity in the form of objective data, which means this is what happened. See, it doesn't matter why the price went up. Because if we focus too much on why, then we get into what? Commentary. We get into opinions. We get into feelings, because we can't go into the heads of why everybody had a buying enthusiasm for Disney here. All we can do is go, okay, what actually happened? Well, there was 15 million shares traded. Okay, let's look to the charts above. Oh, well, we actually just crossed above a trend line. That's what happened. That average trend line was there. The price closed where it closed at 103 at that time, and we had volume. That's what happened. It's either yes or no. Was it over volume? Yes. Did we have a break of the 50-day? Yes, it was. So that now becomes fact-based decisions. Now, you'll see as we go through the process, the percentages and the probabilities of what follows this. Okay, I'm just talking about the objectivity at this point in time. So if you had an ability to find this at that point of time, and this happens all throughout the day, we're really going through about 7,000 stocks, and we're looking for very precise patterns like this. In fact, we can tell, and I'll show you the settings, I can tell the scanner that's built in, the screener down here, to find me stocks that are crossing up on the 50-day moving average and that they have volume. They have volume there. So how we get to that point is understanding the relationship between where this money is flowing in at one point in time. So what we effectively do at this stage is we come in, and I'll show you the strategy, is we look to catch breakouts. Now, I know you're thinking, oh, it's easy to go back in time. Yeah, everyone has to go back in time when I'm teaching you something, right? So we're going to go to real time, and I'm going to show you a setup that's happening now. And there's probably a dozen of them, but I'm going to pick one of the dozen, but I'm going to show you how I get there. So this is an entry order, and it's going to be viewed as a pending entry, okay? Because mind you, everything's done when the market's closed, and we're looking at opportunities that present themselves based on a pattern like this. So for us to be a buyer of Disney, we need the price to break out. Well, a breakout is where the price goes in our direction. So because this is done when the market's closed, we then set up a pending order. We send an order for the next day, which in this instance, it's going to be the following day. So between 4 o'clock and 9:30 the next day, you have time to come in and set up a trade, and you're done, okay? But the pending nature of this allows us to catch breakouts, not chase them. So nothing of what you're going to see is about smashing the keyboard, hitting that market order, and hoping to get a good fill price, okay? This is us being there, waiting for the bell to ring the next day. So we don't have to be there, right? We don't have to be there at 9:30. I don't have to be there at 10 o'clock. I don't have to be at 11 o'clock, because the trade is sitting there waiting for the market bell to open. And if the trade hits our parameters, then we're into the trade. So at this point, we just sit on top. At this point, the next day comes in and we trigger our entry point. And so from there, I'll show you more detail about how to set up the trade when I get to it in a moment. But I'm just walking you through what took place. This movement here did not start up here. It started back here. That was the culmination of this moment of time. It was a combination of trend break with volume. From there, we can find it. And from there, obviously, it goes up. But same thing happens on the down move. Okay, so same thing on the down move. From that initial reversal point, this is where the percentages come into play. From this reversal point down here, I mean, the thing ran up 20% in about 3 weeks. 3 weeks of trading, so 4 weeks total, 28 calendar days, okay? This is that initial reversal point. This is where that shift happens from being bearish to bullish. So as the market then reverses and changes, because it eventually always does, the same thing happens, but inverted, right? Instead of reversing up again, well, the markets don't go in a straight line. They shift and back and forth. So now you have the bearish move. So same instance here, I'm just going to go back to this moment. Well, how do you think a bearish breakout goes? The entry order is basically the same order of the past. So from this reversal down, look at the volume. That is what's known as a bearish, aggressive bearish breakout. It's the opposite of the one I showed here, which is a bullish breakout pattern. Same conversation, same concept. We want to catch the breakout. We don't want to chase it. So we set below it now. So this is, for those that don't short stocks, I don't short stocks. I'd rather buy a put and go the opposite direction. But from that price point, you see the market breakout bearish, and that's that initial move down. So you'll hear me use that term, initial reversal point. So just to give you an idea, from that reversal point to that next low was almost 12%. So that's why I said earlier, it's regardless of bearish or bullish days in the market, it's all about what you're looking for and ultimately, what type of trading you want to roll with. Now you could trade stocks with this, you could trade ETFs with this. Once again, it's regardless of the type of symbol. You can also trade options with this, which I do the majority of the time. So instead of buying Disney, I'll buy the option on Disney. Instead of shorting Disney, I'll buy a put on Disney. Okay, so all of the legwork is done finding the breakout pattern, the underlying stock, and then selecting the option is a 4-step process with this methodology. So it's all focused on the underlying stock because that's how options move. Premiums go up and down based on what's happening with the underlying stock itself. So this allows a top-down approach. You want to trade the option, then find a stock that's going to break out, and then it makes it easier to select the option chain. Now, as you flash through, there's more trend lines that we use for analysis. Now you've got the full 10, 20, 50 model on here. But as you go back and look at these reversals, look at the NASDAQ shift here. I teach classes all the time, every single week, and we break all of these down, and it's a part of our regiment, so we have an expectation. You want to know the breakout point of the NASDAQ? Well, it started back here in January. See the cross, big volume, you see the breakout following it. So the beauty of it is you can go back at any point in time and you pull up your favorite charts, put exactly what I have on your charts. Once again, it's widely available. These are not proprietary. And go look to your stock, your favorite stock of choice, and look back at these reversals. Do you have a cross? Do you have volume? And you'll see the corresponding following moves that occur after it. Now, there's many ways that we can use these moving averages, and we do a lot of different strategies around them. It's not just buying the reversal. We also can time the tops and times the bottoms with it. So it's highly dynamic. But from a basic approach of finding new trades, being able to find a point of inflection where there's a effective squeeze where you get a shift of sentiment. What was once bearish becomes bullish, right? What was once bullish becomes bearish. That big shift is usually where you're going to find the bigger percentage moves. Meta, wow, Meta took off. Well, we identified Meta way back here in December, right? You come to something like Tesla. We were talking about Tesla down here on these reversals, but for our more basic approach, you start to see this transition happening here about a week and a half ago when we got above that 50-day. Okay, so it's regardless of the type of stock, once again, it's about finding the recipe. What is that combination that allows us to go find these movements, to be ahead of them and not chase something down? Chasing is typically where you get into trouble, right? That means the move already happened and you're the last to the party. That at that point, you're typically, you're the one that is buying what the initial movers are selling to you, right? The ones that already were in position for them to get out, right? They're going to sell. Then you're buying what they're selling, and that is a timing issue. Okay, so that's where timing comes into play. But being at that tip of the spear at that point of reversal is where you can switch and truly transform your type of trades, because now you're at the moment of reversal, at the pinnacle peak of the biggest move to follow. And that's just a different philosophy and a different timing all around. So we'll come back to this list if you have questions about it, but here's the reality. These are stocks that are at different stages. You've got Disney that's retracing off of a strong trend. I'm not buying or selling this yet. It's not in an ideal situation to lend itself to a highly profitable next move. Okay, you looked at something like Tesla, same thing. It's actively running. This trend could end and set up a deep retracement here soon. I don't want to buy that knowing that there's a potential ceiling on it. Same thing for almost anything. It's going to be at a different stage. If I come to Amazon, You know, Amazon's closing now below the 10 and 20, right? From here, it's most likely to come down to the 50-day, okay? What I want to find is the moment of biggest and highest probable move to follow, okay? That's going to have to put me in a position to find this reversal point. So how we get there is simply understanding what this moment of time is and then reflecting it in search criteria. Okay, so what I'm going to do now is I'm going to pull up on the screen one of our most used checklists around this strategy. Okay, so I'm going to pull it up so you can see it. You can take a screenshot if you'd like, keep it as a souvenir, or you can actually use it because it's tenured and it works. So you can actually use it, but as a starting point, I want you to at least have a basis to understand what we're looking at in the market. So I'm going to pull up this strategy. It's called the aggressive bearish checklist. Now I'll zoom out so you can take a screenshot first before I break it down for you and get rid of these bookmarks so you can see more clearly. There you go. Now, if you don't know how to take a screenshot on your own, you can actually do it with GoToWebinar. So, and then when you have it, you can zoom in as you need to. So if you're in I know you're in GoToWebinar, but if you're in full screen, if you have the full screen, then you want to get out of full screen. So to get out of full screen of GoToWebinar, then you need to hit that little double box, very similar to like a browser. So hit that box, you'll exit full screen. And then on the top of your viewing window, where you're seeing this checklist, on top of it, you'll see a camera button. Click the camera button, you can take a screenshot. It'll save it to your desktop. Okay, so click and save it to your desktop, and then that way you can have it. Just type in a yes, or give me, if you're on a mobile device, give me a thumbs up if you're taking a screenshot, and then I'll break down the exact rules of how this goes. And then that way you have a step-by-step, a clickable way to go find opportunities. Yep, you are welcome. Okay, got the done. Yep, you're welcome. All right, so now let me zoom in here. So this should tell the story. Okay, we're looking for bearish moves. Okay, a potential bearish breakout. Now here in the middle, it says trading view, but once again, you can use this on any screener of your choice. There's many out there that are free. You can go to bar charts, you can go to stock charts, I think is another one. There's lots of different screeners that are available. Even in fact, I trade at Thinkorswim with TD Ameritrade, and there's free charts there, and they have a free scanner. So you can run the same search criteria. So what's happening here is we're actually seeing a lot of data here. Okay, so we're asking for several factors. And at this point, I'm going to pull up trading views just so it's symbiotic here to what we're looking at. So when I pull up these filters in the middle, let me go to full screen. There we go. We're being very specific, and I'm going to walk you through this. Yeah, FinViz has one too. You're right. Yep. Yeah, I look at FinViz as well. Okay, so when we're on these filters, now anything in blue here, like this light blue, is what we're actually searching for. Okay, so basic stuff, symbol type, exchanges. Okay, so New York Stock Exchange, NASDAQ. So number one, I want to set some liquidity parameters. So market cap is one of the bases of liquidity. So 200 million or higher market cap. So that's really including all small caps, mid caps, large cap, mega caps. Okay, so small caps are higher on the market capitalization. Another liquidity is the number of shares traded. So liquidity, of course, allows us to get in and out. I want to buy it at the price I want to buy it at. I want to sell it come time to sell it at the price I want to sell it for. Okay, that's liquidity. Now it's set at 1 million shares or more. Okay, so this is my daily liquidity. So this is only going to pull up stocks that traded over 1 million shares. Now whatever time frame you're on. I'm on a daily, so that's today. So they must have traded at least 1 million shares or higher today. But I need to have a more historical view of liquidity. So there's another liquidity filter around volume. This is telling TradingView to only give me stocks that traded an average of 1 million or more in the last 60 days. Okay, so what this does is it removes those, fly by night companies that all of a sudden there's 1 million shares and the stock price jumps 50% and then it never trades at 1 million shares again. So this is more of a historical liquidity factor that, once again, helps me avoid any of those, overnight fly by night companies. Okay, so 3 liquidity settings here. Now the next thing I have is a momentum filter. And so we're using relative volume. So relative volume is a formula that's based on a factor. Okay, so instead of a percentage, it's a factor. So what I've said is I want the stocks that traded above their average today. So above 1 means above their average. So instead of 1, think of 100%. So if a stock averages 1 million shares, they traded at 1,000,001 shares, then that's over the average. Then that would check the box. But if something averages 2 million shares and today they traded 1 million, then it's not going to show up in my list. Okay. This is my momentum. Now the final filter is around pattern. So P for pattern. I'm looking at the price crossing down on the 50-day moving average. So I've got liquidity, I have momentum, and I have pattern. After this, and remember, each one of these have to be checked off. They have to qualify. So it's not or statements. It's not market cap or the price crossing down. These are all and formulas. So they have to have, every single one of these have to be checked off to show up. So based on this, we have 19 matches. You can see the results down here. There's 19 of them. Now, what you're going to see is that you have similar patterns because I asked for very specific criteria to show up in this list. So let's start with the first one, which is Ecolab. Price just crossed down on the 50-day with lots of volume above the average. The average is 1,000,008. Today, there's 1.8 million. Okay, that's above the average. Look at the price crossing down on the 50. Same thing, price crossing down on the 50, right? Of course, they're all going to look the same because I asked for it. There's Google that crossed down on the 50, right? They're all going to look, that's a big old cut in it. Big volume. It's because that's what I look for. This is more designed around finding the particular moment of time where we have a potential breakout opportunity, just as I've shown you. And it's gonna, some of you may take a few of these to see, some of you may take hundreds for you to see this play out, but to each their own, right? Everyone's gonna have their own timetable of seeing this play out into the future. Same thing here, we got a reversal point, okay? They're all gonna be identical, right? Because all in all, we ask for very specific settings. So from this standpoint, like I said before, I don't like to short stocks outright. I'd rather buy the option on them than dealing with shorting a stock. Okay, it has its pitfalls and it also has benefits to short stocks, but I like to keep things simple and also try to keep things where it doesn't require a high level trading account to participate. Okay, so once again, I try to work with all walks of life, from first-time traders, seasoned investors, also all different account levels, right? I don't ever collect trading account size, but I also want to make this approachable no matter if you've got $3,000-4,000 or you have hundreds of thousands of dollars. It's not more. Okay, so when it comes down now, okay, where's the actionable setup, right? So how do we take a list like this and actually get to an actual trade? Well, I'm going to start with, and this is actually a trade that we took on Halliburton on a long call. We actually hit our profit target, but let me get rid of this previous trade setup. Went right to profit target, and let's talk about this pattern. Like I said, I'm going to show you a full setup from end to end, from start to finish. So first step was, I want to find a stock poised to break out. So I got a list of 19. We're going to go with Halliburton. I know Halliburton, I've traded it multiple times, many times. It's got liquidity on the option trade, so I'm not worried about that. From here, it's time to set up the actual trade. Now, obviously the market's closed, so I'm not going to set up for today. I'm setting up for tomorrow. So the first thing I'm going to do is I'm just going to, and I do this on every one of my trades, I diagram out and I label it so I can use it for teaching purposes, and I can also track this because the service I provide is called the Rapid Profit Method Plus, and it's a combination of teaching, coaching, live analysis every week, training resources, watch lists, as well as I send out my picks. So I send out signals throughout the week. So anything I do here today, I'm going to send this out to my traders tonight. So I always like to keep it cataloged, and I have it on a tracking site, so all the details go into one repository. All right, so the first thing I'm going to do is I'm going to set up my entry, and all I'm doing for those that took a screenshot is I'm following the setup. So the trade setup is listed: set pending entry 1 tick below the bar low, set 2 profit targets using previous lows, set stop loss 1 tick above previous high. Now, if you don't know how to do any of those things, that's fine. Once again, I teach this process. I have 10 hours plus in my empowerment toolbox area to teach every one of these concepts. And then we're going to take it all the way down to the option chain selector. Okay, so we've got delta rules. We're looking for certain open interest criteria, certain expiration month selection, and then of course we're looking for certain spread percentages to make sure we don't jump into a high spread scenario. Okay, so first step is the actual trade. The second step is deciding which option we're gonna use. Now, I'm not going to use multiple profit targets because I'm going to be trading an option, and I'm going to go to one target, the first target, because we have time to worry about, right? We're not going to hold an option forever. We have an expiration to worry about, right? So these contracts are not open-ended, right, per se, to really maximize it. So ultimately, we're going to be looking to profit out before we expire, okay, to maximize the move. So from here, I'm going to use, and for those that can't recognize highs and lows, another indicator we use is almost like a GPS, right? It's almost like your waypoints, you know, on a destination, right? You know, I go to North Carolina a lot, and you know, I put the address in GPS, and you know, we're on our way. But if we need gas, I'll go look at waypoints, right? Destinations on the way out. So same thing here, but what I've done is just turned on what's called fractals. It's an indicator. Once again, it's public domain. There's nothing proprietary about it. But what it does is it gives us highs and lows in the market, defined highs and lows. So red arrows are highs, green arrows are lows. So as you saw with the rule, this just makes it easy for my traders to identify where lows are and where highs are. So it's just a very simple tool to help us visually see key points in the market. So from here, I'm going to look below, right? Because I'm going to trade a bearish move. I'm anticipating a bearish breakout. So I'm going to be looking for lows to take profit, okay, to exit. Because what I'm going to be doing is basing my entry on the stock, as I'm doing here. I'm going to also base my option trade on closing out on the underlying stock and also with a stop loss. So every piece of the option is going to be driven by the underlying stock. Okay, so I'm going to show you how that ties in a moment. So setting the profit target is where I always start. So what we're going to do is I'm just going to look at previous lows that can generate enough profit on an option trade. So we've got a low down here. I'm going to make that a profit target. All right, so we've got entry, and now I've got a target. What we're going to be doing is setting up a trade for tomorrow, and everything is going to be set up at one time. I'm going to have an entry, I'm going to have a profit target, I'm going to have a stop loss. So if we hit the breakout price, if this goes down to 37, 36 or lower tomorrow, it'll trigger the trade automatically. Most of these trades trigger when the first 15 minutes of the market open. I'd say most, it's like 80% of these types of trades. Within that first opening movement of the market, the biggest volume period. So end to end, I'm fully protected from the up and down movement in the form of stop losses and a defined profit target. So I'm also going to go to a previous high and set a stop loss. Okay, so I can minimize and mitigate my losses. So that way, once again, full end-to-end protection of the trade. Okay, it's a bracket trade. It's called an OCO. One cancels the other. So if the profit target gets hit, then my stop loss will disappear. It'll cancel. If I hit the stop loss, my profit target will cancel. Okay, but it's contingent upon, and that's the magic word, contingent upon the entry being filled. Okay, so now I've got the architecture of the trade. I know where I want to buy the long put. So I want to buy a put and trade the bearish move. I also know exactly where I'm going to protect my trade so I don't lose too much than I have to. There's always risk, right? So I'm going to manage risk outright. I'm already going to know what my risk is. And then, of course, I want to be able to take my profits off the table to maximize the trade on that side. So now I'm going to take this and translate it to the option, following those 4 steps. So I'm going to pull up the option chain. Once again, this is what we trade and track all of these positions with, is with Thinkorswim. This is our tracking account. So down below here, we're going to jump over to March. And now, because I'm on the put side, I'm going to be on the right side. That's how I have my template saved. And now I'm going to be looking at the various option chains. Now, what we're going to do is we're going to follow the 65-75 delta. Now on the put side, it's a negative 65, negative 75. If you're unfamiliar with how to read option chains, I've got an options mastery program that we've set aside for today. So don't worry if you're not all the way up to speed on all the different data points here on an option chain. If you want to do it, I've got the teaching and I've got the resources to help if you want to do it. It's up to you, okay? But ultimately, following the 65-75, that's the first thing I want to start with. Second thing I look at is open interest. Open interest in the options world is where we get liquidity. It's not volume like we look to volume on the stock itself. We're looking at the open interest, how many contracts are open for liquidity purposes. So 100 or more is the minimum. We're at 1,000, so that checks the box. Now the spread is the next one, 10% or less, and we have that. It's only a 10-cent separation between the bid and the ask, so that's less than 10%, the difference of the two. So this is the option I'm going to select. Now from here, if you're unfamiliar with this process, feel free to ask questions, but once you understand the output of what I'm going to show you, it'll make sense. And then from there, I'll tell you that I have clients, once again, there's like over 500 active clients that follow me throughout the week. We have brokers all over the world. All the major brokers in the States, plus all the large, international outside the US brokers follow the same process that we do. Obviously the buttons are going to be different, right? But for here in Thinkorswim, what we're going to use is a OCO bracket order. Okay, so we're going to use a bracket.
Matthew, sorry to interrupt you. Can you please check your video?
All right, so there is, I see the screen's froze. All right, can you see my screen now? I haven't.
Yeah, all good. Thanks.
I don't know why that's happening, but okay. Okay, you see now? Okay. So here's the option chain we're discussing here. I don't know when it cut off, but here's our option chain. So remember that it's all in the checklist. So if you have the checklist, I'm just speaking aloud to the checklist because, I want you to be able to see the window. But here's our 66 delta. So that's our 65-75 criteria. Open interest at 1,000. Here's our bid and ask. All right, so from this point, I'm going to tell the broker how I want this trade to go. So to do that, I'm going to set up, and once again, this is nothing proprietary to Thinkorswim, okay? I'm going to tell them that I want to buy the put with an OCO bracket. So what this does is it pulls up a ticket with 3 orders in one. So they're connected. What you're going to see down below is there's 3 orders here. There's 1 green, 2 reds. The reds are selling orders. So I'm going to have a buy order, which is going to be the initial trading setup, the buy order, okay? The other 2 are going to be brackets. So I'm going to have 1 above, 1 below. One's a stop loss, one's a profit target, okay? This is the bracket. OCO means one cancels the other. Whichever happens first, it'll cancel the other one. So from here, I'm going to tell my broker to only buy the option if the underlying stock marks at my pending entry or lower, okay? Because remember, this is the price that would give us a breakout in our direction, right? We need the price to actually move at or below the 37.36. I want to be lower than today's low, okay? And the reason for that is it needs to continue. So I'm going to move the trade to the right so I can see the actual prices. But this is what I'm going to tell my broker. So I'm going to buy the option. It's only for the day, so this is only good for tomorrow. On the condition, so the key is on the condition. So here's the condition to execute the trade. So buy the option on the condition that Halliburton marks less than or equal to the 37.36 price. So down below, you'll see the description of the actual order, the written explanation. So it says here again, submit the following order. I'm going to buy 10 contracts, Halliburton on the 17th of March expiration, $40 strike. I'm going to be buying a put, and this is to open the trade, right? This is a new trade to open. But wait until the following condition is satisfied. The mark price of the security is less or equal to 37.36. That's the entry price, 1 tick lower than today. This order will show a wait condition status during waiting. So it's going to be waiting conditionally, waiting on this condition. So that's step 1, set the entry criteria. Now, number 2, I'm going to come in and I'm going to set my stop loss criteria. So I want to now sell. I'm going to leave this good till close. Okay, I'll explain that in a lump in one moment. So I want to sell the option on the condition, and this is going to be my stop loss. Sell if Halliburton marks greater or equal to 39.61. That's my stop loss because it's above, right? I want to catch a down move. So my stop will be above our market price. So 39.61. I just pulled that off the chart that we just drew a moment ago. But now I've got to have my other bracket, which is going to be the profit target. So I'm going to now leave this also good till close. I want it to be active as long as my trade is active. But I want to sell now on the condition that Halliburton marks at or lower than $32.97. So same thing on the bottom. The difference here on these brackets is you have an additional description. You see in the middle, it says wait. So it says submit the order, right? Wait until the trigger order for this group is filled. So remember, this is contingent upon the first order, the buy order, to execute. If the buy order doesn't trigger and go live, then these trades cancel. The first order, the green order, the buy, has to go first. That's what this is saying. If that happens, then wait until you hit 32.97. So when I open the confirmation window, you can see the entire details of that trade, and it's all on one ticket. They're connected. They're locked in and tied together. So again, in green is the buy order. And then I've got my corresponding stop loss and profit target. Everything lined up and protected. So once I hit send, now I've got an active trade. And it now shows up in my working orders. So this is the working orders. These are active positions. We're tracking with our stops and profits, but here's the trade I just placed. So you can see the time. It's 5:15. I'm in Florida, so I'm on the East Coast. This is 24-hour time, so it's 17 hours, 15 minutes, and 4 seconds, which is right now. waiting conditionally. It's waiting on the condition that we told the broker, right? The price at 37.36. And then below that, you've got my profit target stop loss, waiting on the trigger. So these are just waiting in limbo until, and it's not only until, it's if Halliburton does what the pattern is set up to do, which is to break out bearish. So the translation always starts at the top. I want to find the underlying stock poised to move. And then from there, I drill down if I want to trade the option. And then from there, I'm selecting based upon a straightforward 4-step approach. Now, my traders have all walks of life experience. So some are more advanced, some are more basic, but we go through all sorts of different types of scenarios and strategies in our different sessions throughout the week. They're all live, but this is the end-to-end process. So for me personally, this frees up a ton of time because I don't sit here and watch and go through dozens and dozens of charts every single day. When people first start off with this method, it may take you half an hour or 45 minutes. But what I teach every week is that you want to be efficient. You don't want to stare at these positions too long. Okay, you don't want to overanalyze a chart. I'm going to show you how to self-select which ones have a better move because there's 19 of these. There's days when there's 60 of these. Now this is aggressive bearish because this is where the last few days of sentiment has been, is more to the retracement on the down move. So there's more of the aggressive bearish than the opposite, which is aggressive bullish. There's only 6 matches on the opposite side. So the opposite, once again, is the aggressive up move where you have the cross coming up. Okay, so to keep it simple, you go to where the majority of the matches are. And so based on the latest and final pricing, you can see we're up to 29 matches. Okay, so here's Halliburton once again in the same one. So this method is allowing us to find the moments of reversals. And this is today. Okay, so this is set up. I'm going to be sending out to my traders here full details of the trade. I'm going to be sending out everything I set up here. I'm going to be sending out what option expiration, what direction, obviously the long put. They're going to know it's Halliburton. They're going to know exactly where to buy it, when to put your stop loss, where to put your profit target. I email this out. I text message this out daily based on my picks of the day. So they have a complete end-to-end trade where there's no babysitting. You don't have to come into a room to find out what to do with the trade. All of that is already done because you have it all up front. So going back, just to show you a almost identical setup. This was back in the summer. You see the reversal? Looked up and down. There's the big reversal bar. Look down. We had the volume break the average, and the price fell off the table, right? That is almost identical to where we are here. Now, this is just Halliburton. We can go on any chart and look for that same pattern and see how it shapes up. Thanks, Mark. Appreciate the feedback. Thanks for helping out there. Say ADP. Yeah, so the question is, or the statement is, so second and third orders get triggered after execution of first order. Yeah, first order is OTO. Yeah, you could say it that way, and the others are OCO. Yep. So the first trade is entirely dependent upon the conditions being met. So when you click on it, you'll see this trade is only going to trigger based upon the mark price of the security at 37.36 or lower, less or equal to. That's the go moment. When that happens, the trade will fire. It'll trigger the trade and you'll be into that position. When that happens, these OCO trades will transition from waiting trigger to waiting conditions. See, waiting on the conditions. All of these below here are active trades. They're always protected. Both sides, stops and profit targets, every single side of it. The tracking that we do is through the roof. I mean, people ask me to add stuff, so we add to, you know, the tracking all the time, but everything is delivered and then tracked with a massive spreadsheet of, you know, 300 and almost 350 different trades over the last, you know, 2.5 years. So that way you can always go back and see what happened. You can always double check your work, right, to make sure your trades are set up the same way. But the uniqueness of this process is that everything's up front. There's nothing behind the scenes as far as, you know, I don't say this in a negative way, but other, you know, services, there's some relying upon you managing the trade after the entry, right? They may say, oh, we're going to be buying Apple, you know, buy this option, but they don't really give you all of the entire trade detail, right? They don't give you in the future how you're going to get out. You have to either, you know, get an update. Maybe you have to go to a trading room, a live chat room, and get an update on the signal. I decided a long time ago that I want to have the most simple and transparent way to follow the process. And so I send out signals. I in my career, I tend to be more focused on, you know, teaching, coaching, mentoring it. But, you know, starting about 2.5 years ago, I had so many requests for, you know, hey, what are you trading? You know, what specific trades are you in? And so I said, okay, well, there's a lot of requests. So I decided to say, okay, then let's just create a program to get them out to people so they can follow along. But I've been teaching this for a decade. You know, it's been part of my strategy. But the signal side of sending it out has been about 2.5 years. But I've always been more focused on, you know, passing on this knowledge than making this where you're relying upon me forever, because, you know, I don't have any plans of leaving this market. I love trading, I love coaching, but, you know, I think as I've seen with my traders over the last, you know, 5-7 years now that have been following this with me, is that they really start to evolve and transition their entire trading around this model. So they don't really trade any other way. What they do is they start trading and tailoring their activities around their passion, which is, you know, could be advanced options, multi-leg options, straddles, strangles, could be covered calls. Because ultimately, once you understand the flow of how the relations work, what I shared today is the most basic approach to identifying trades. From there, the adaptation comes into timing the end of trends, right? When to expect the trends ending, getting in front of the reversal before it actually reverses. You know, that's where you really start to expand your depth of forecasting. But from a high level perspective, you know, all of this movement, and though it's simple to say now, this run up on the SPY, we track every single week, every single day. We're tracking towards all of these goals. Nothing around these movements here are unexpected. We don't ever operate in a shock and awe. This pullback, these retracements, we've been talking about since Monday last week about the fact that we're going to pull back. Don't be caught off guard when we have red days. Don't be caught off guard when the price is starting to slide down. And not only that, we also have specific price levels that are identified for the next move up again, because it's going to happen. I mean, where we sit now, we're going to get another up move as long as we can hold our support. And we've got clear lines of support that we're monitoring and driving towards our trades. So it's not just new signals, it's also an evolution of how do you even forecast any chart anytime. But, you know, obviously that's based upon if this is resonating with you, then of course I have all the different support and resources to help you. But it's all about, for me, this adaptation of where we are today and what you just saw, this process is based upon a desire for, number one, my personality type. I needed a method that put me at an arm's length away from subjectivity, because I'm an optimist. Some would say I'm too much of an optimist and not balanced enough, where if I stare at something, as I mentioned, the longer I stare at something, the more research I do, the more reasons I'll find to buy something. Okay, so for me, I wanted an ability that would be fast and efficient. It'd be data driven, so I don't have to, you know, leverage my optimism, right? Manage optimism too highly. I want to have something that's balanced. So at that point, I'm not stuck in commentary. I'm not stuck in, you know, trying to interpret like Chairman Powell's, you know, statements at the end of every FOMC meeting, right? What I do and what we teach is let's use the data that actually transpired, what actually happened, right? Because you can't argue today that Halliburton had 13 million shares and the average was 10 million. That's what happened. Okay, that's 3 million above. That's 30% higher than the average. You can't argue the fact that we just closed below that 50-day moving average, because that's what happened. It's a math-based formula. And then from there, drilling down and finding the option chain is using data-driven decision making, right? The delta gives us certain intel, certain information. The open interest does as well. The expiration, making sure we have enough time to let the trade fulfill itself, is also data-driven, right? It's objective because that is a formulaic approach. Now, if you like to be in strategy just on smaller time frames, I've got traders that day trade with this method as well. But the concepts don't change. The template here does not change. The way we leverage the different relationships between where these trend lines are crossing, where do we find support resistance? I mean, I teach, you know, 2.5 hours twice a week, so almost 5 hours a week of live market in the current conditions. And it's a combination of analysis for forecasting, so people know what to expect in the overall market. And then we drill down to finding individual opportunities every week. So to me, the signals I send out are, it's a supplement to help teach the process. And of course, you can make money with us, you know, based on the track record. But, you know, ultimately, I always appreciate those that, you know, at least show up to my live session so you understand why. If you can understand the why, it's a lot more empowering than just simply following, you know, blindly the process. It just never, in my experience, leads to a good experience if you just, you know, take the fish and you can never really just go out and, you know, cook the fish, you know, right? And if you want to catch it, sure, you know, I'll show you how to catch the fish too. But to me, it's really just understanding concepts can really help the psychological side of trading, because now you're not going to be caught off guard. And sure, the markets don't go in a straight line. There's no absolutes in trading. No one's 100%. But I can tell you, you will be a dramatically different trader if you understand the relationship between price action and how momentum plays a part in it. And if you can do that, it's hard to describe the shift mentally that you'll have. But nothing here in front of you is new. Moving averages are not new to the market. They're the most actively used indicators in this space. Understanding volume is, once again, a cornerstone of how the markets tick, right? It's how they work. So this combination is a different approach in how we combine it together to the trade, to the detail that I showed you today. And it doesn't take you months to figure out. Many of you now, especially those that have some experience, can see the method and at least appreciate the method. I don't expect you to be a 100% believer in just one session if this is the first time you're seeing it. If you are seeing this for the 7th, 8th, 10th time and you're not a member yet, maybe you should give it a shot and put it to the test and see in real time how well it can or can't work for you. But oh, I love it. Thank you, Mark. I appreciate the comment. Mark says, I learned more here in the last week and a half than I have elsewhere in the last year. I love this program. The crumbs that scatter during your live training sessions are pure gold. Appreciate it, Mark. Glad to have you there. Yeah, we try to keep it upbeat. We try to keep it, you know, balanced, right? The most important thing for me, at least in my personality, is to be balanced. And that's why, you know, having an objective process, a process that, you know, no matter what side of the bed I wake up on, no matter, you know, how much sleep I got or didn't get, the formulas aren't changing, you know. So that to me is really, you know, to a coaching side, there's not a lot of discretion around these formulas. Now from here, when we start talking about results, go back on any chart and see this pattern. Now, once again, it's just Halliburton, but the forward real world, right, is obviously a different place than being able to go back and point these out. But like I showed you a second ago, come here and then look at this movement, look back here. See that cross? See that cross, right? We were running bullish. Uh-oh, we had a shift. Look down below, we had volume. That would have shown up in June for an aggressive bearish breakout pattern. The same pattern that I used, the same formula down here is the same pattern that was back here. And look what happened. Go to the up move. There's the aggressive bullish breakout, right? And once again, this is just one. There's another 29. There's probably another 5 or 6 down here that have the volume, that have the open interest, that have the liquidity on the option, right? But most people can't trade 6 in one day, can't trade 10 in one day, definitely can't trade 29 in one day for most people. So I coach to selection, right? How do you know which one has the bigger runway, right? Which one has the biggest opportunity? Of course, I send out signals every day. There are days like the last couple where the market's just not ideal for new trades. And I don't send out trades for the sake of sending out trades, but on average in a week, there's probably 10 to 12 signals that come out. Some weeks can be more, and then some weeks like this week, it's lower because of the condition. So that's the basis of how the method is used in real time in the real world, and not simply just going back and looking at old charts. Now we've got tons of data around all the testing and all the actuals that happen. I mean, there's so much data tracked that you can go to your heart's delight and look at trades that have gone back years in the past, and go look at the pattern and go analyze it and go see how it played out over and over again. I mean, that's just the data behind it, but this is an idea of what it all looks like. So this is the track record, and this is all of the details. So as you mentioned here, as I showed you on the Halliburton, right? So here's that lift trade down here. So this is our tracker that our clients have access to. Like I said, there's over 500 clients, pushing 500 clients now that follow the signals and that come to my live classes every week. But this is, and then it'll all come live. They also watch the archive, right? Which is, appropriate because not everyone has time throughout the day or time in the evening to go live with me, but the archive is widely used. Like Monday, we had 90 plus people just watch the archive after the event. But you can see exactly what happened. What strategy did we use? So you can cross-check and check your checklist and see how the trade was identified. You have the symbol, of course. You've got the strategy. We buy in a call. We have the entry price. We have the close price. As we track them, you have all of the strike pricing, the premiums, the trigger prices, right? That's your go moment. Everything's tracked. You also have screenshots. So you have the trade tickets, same way I did tonight with Halliburton. I'll post that tonight into the tracker so everyone can see the actual ticket, right? So you can double check your work basically. So here's that lift trade, 8 o'clock at night, it was sent out. So between 7 o'clock and 9 o'clock at night, we send out new signals. So that gives you 12 to 14 hours to go place the trade with us. Okay, so you got, basically half a day to go place the trade before the next open. I just recommend you do it before the open. And then from there, your trade is waiting. Now, here's the final ticket. So you can see that the execution, this is that lift trade I talked to you about, over 100% profit. So you see the exit time, 9:31 and 1 seconds. We sold it once it hit $15.96. It automatically closes out. So same way you come in, same way you come out. If it hits a stop loss closes automatically as well. The only time we adjust it is if we come up against expiration, right? So if the market stalls out, then I'll send out adjustments. So, but it's all done after market, okay? So you have plenty of time to go in and update the trade. My goal is to never catch anyone off guard. My goal is to make sure that everyone has the same amount of time to follow along as close as possible. We're never gonna have 100% similarities because you may get a better entry than I got. You may get be at a better price on the exit than I get, but you should be within 5% of any results that we show and track to, because we have the same entry trigger, we have the same profit target, we have the same stop loss. But the variance is just individual brokers and timing. But you're talking milliseconds, but milliseconds can make a difference. But it's a very close variance between what we track and what our clients follow along with, because everything has the same data from the get-go, right? Everyone's playing in the same field with the same rules in the same time. So if this process is of interest to you, these are the results through probably a few weeks ago. But this is the performance over the lifetime of these types of signals being sent out. So once again, these aren't new to us. It's definitely going to be new to you, but they're not new to us. The net profit percentage is a simple formula. You take all the profit, and this is not done by, and I'll just explain, this is not done by some, made up starting point, right? It's not saying, oh, if you started with $100 and you won all these trades, this is how much money you would make. I don't track performance that way. I actually do it, in my opinion, the most straightforward way, which is you take all the trades, you take what your entry was, you take the exit, right? Whatever premium we got in, what premium do we get out at? And what's the difference, right? That's a percentage. Well, you add them all up, and this is what that profit percentage is. So it's not based upon a starting account size of X, Y, and Z. It's the performance individually added up by each individual trade. So since inception, we've captured, this is probably 2 weeks. I need to update this, but it's over this number, but 2,980%. So you add everything up, that's what the total sum is. That includes winners and losers. This example below, this return, is an example. So if you average $3,000 per trade, some of my clients average more, some less, but this is just using a basis of $3,000, then that would be $89,000 in profit. See, this 2,980%, that's not including your investment. That's not including the cost of the trade, the initial investment, right? Some people like to say, oh, well, we made $5,000 on this trade. Yeah, but it cost $2,500 to get into it. That's not what this number is, okay? This is the pure profit and loss of the individual trades themselves, regardless of what the investment is. So if you only had $1,000 to follow, okay, then that would be $1,000 times 2,980%. So that's about $30,000, right? If you have more like $5,000, then you're talking almost $150,000. But this is an ability for you to make this your type of expectation, right? Whatever your average investment size is. And if you've never heard of average investment size, then you need to watch my money management, because you need to have a consistent investment size per trade. You don't want to be trading 1,000 here, 10,000 in that one, 500 in this one. You want to set a standard investment. If not, you're potentially setting yourself up to be an all or nothing trader. But that's some of the different tips and tricks I'll walk you through. But that's what that performance number is. So now, as you recall from our introduction, when I introduced, for many that don't know me, introduced my background and why I do what I do today, I told you I wanted to do things differently than my past experience. We were pumping out new products and services every week, anywhere from a couple $100 product lines to $10,000 product lines, under one goal, which is to make more money, right? Is to sell more. Well, when you have a clientele base, then how do you get new revenue? Well, you come up with something new. Well, I don't have an army of overhead that I need to cover. My team is lean and mean, and we also price accordingly. So I don't have sales teams that come out and call you on the phone every day. I don't have a huge marketing budget to drive traffic to our sites. We leverage partners, and Investorexpo is an amazing partner of ours. Worked with them for a long time. And that's how we're able to offset a lot of overhead. And so with that overhead savings, we're able to pass the price savings to you. So you're going to see an unbelievable price for the information and content and resources you're going to get access today. Now I want you to keep this handy. This is your special sign-up site, rapidprofitsmethodplus.com. Don't go there yet, just keep it handy, because I want to walk you through what comes with this program. So initially, and the focal point is going to be the signal service. So you're going to get email alerts Sundays, Mondays, Tuesdays, Wednesdays, and Thursdays between 7 o'clock, 9 o'clock Eastern time when trade signals are identified. So you have, once again, 12 to 14 hours to put them in your account for the next day. You'll also be notified via text message if you want text messages. And then as I showed, we have complete tracking, so you can go in and follow along with all the trades in our tracker. Now, with this program, I'm going to include 4 bonuses. Bonus 1 is live access to my training sessions. We're going to include my empowerment toolbox. This is where all of my resources are, my training lessons on finding entries, how to use the trend lines, how to leverage momentum, how to read option chains. Everything that you need to follow the program is given to you in this toolbox. I'm going to give you the Options Mastery Academy. These are actual values where we've offered and sold these products. This is not something that we just put on the screen. These are actual prices that we've sold these product lines before. But because there's such a strong desire from those that are new to options to get into the options market. In fact, in January, we had the largest volume ever for retail traders. It was like 23% of the volume coming from retail traders, more so than even when we had the pandemic and there was a huge push then. We actually broke that record last month. So there's a lot of people that want to get into options, but you're just not quite sure. Well, I wanted to make sure you had a resource for it. For those that are experienced, but you're looking to elevate your game in options, then I also wanted to make sure that I had support for those looking to get to the next level. So instead of selling these independently, we decided to roll them into these special bonuses. And then, as I mentioned briefly, an important lesson, undervalued lesson, is money management. So I'm going to make sure you have these 4 bonuses that are here to help provide additional support and resources to really maximize this journey with us. Now, when we come to the options training, my goal is to make sure you understand how to read them starting off, but then I'm also going to teach you how we go through and use the various options data. And there's more than what we talked about today for those that are advanced. I wanted to show you once again the basic approach of how we find trades and set them up. When we start breaking down, making a choice, right? You're going to see, like today, there's 29 matches at the end of the day. Well, in the 29, there's probably 6 to 7 of them that are solid trade setups. Well, if you can only trade one, how do you boil it down, right? So this is where we start to walk you through all the different various additional variables to help find which one's the best, right? The best of those best that showed up. Well, a lot of it comes down to the options chain. Setting up the entries, as I showed, was just one way to do it. And that's using a underlying stock pattern, using the price of stocks to then drive your options. That's one method. The other methods I teach is about how to trade using multiple targets, multiple profit targets, objectively, all set up in advance. And that's just a few of the ways that we use auto setups, right? How to set up triggers inside of your different platforms to manage your trade objectively, because that's what it really helps with. Setting trades up in advance, like I showed today with Halliburton, removes a lot of the emotional management, because in the back of your mind, you already have a stop loss, you already have a profit target defined. So you really step an arm's length away and from that P&L management, red days, green days driving your life. Now you're always going to know that you already have all your protections. You don't want to manage your trades by the red and green of an active P&L statement. Okay, that's emotional. That's full of anxiety. So we're going to avoid that by being set up in advance. We have 10 active checklists. You're going to have access to all of them. If you want to trade on your own, feel free. You're going to have all the checklists. You're going to know exactly how to use them. And then you're going to know, based on the signals, which of the strategies or checklists generated the signal. So you can, depending on how much you want to put into it, you'll be able to go back and cross-check and see in real time the selection process, right? But these are 4 of the core checklists that we use, but there's an additional 6 on top of this for different conditions, right? For different styles of trading, all using the same base moving average and volume approach. Even though there's 10 different checklists that you can use on your own, they all use the same 10, 20, 50 with volume indicators. Nothing changes, once again, on the base. It's just how you use that base approach is going to be up to you as you evolve with this. And once again, the evolution does not take months, it takes weeks. In fact, for many of you, in the first 2 weeks, you're going to know if this is truly working for you or not. It doesn't take long. And of course, money management, right? So these are some of the extra support benefits here that I'm going to make sure that you have. Is some of the most boring stuff, right? Money management's never been, widely popular to teach it, but I think it's just widely important to have. But you're going to make sure you have that. So to give you an idea, this live trading room, it's called the Market Pro Live Club. This is my favorite piece of the program because I get to work with you where it matters most. And that's in the current condition, right? That's in the right now moment. This is where, you need me more than anything, is in the current condition. And so every week, twice a week, from Mondays at 7, Thursdays at 12. We just had our class earlier today. You have the luxury starting today of going back and watching today over the weekend, and you're ready for next week. Everything's done 2.5 days apart. So Monday night, we're going to look to what we talked about today and see how the plan carried through between what happened the rest of the day today, all day tomorrow, all day Monday. And then from Monday night, we'll be ready for all day Tuesday, Wednesday, and then half a day Thursday. And then we repeat the cycle. So you can go back. We have a huge archive, so you can go back at any point in time and see how we discussed the movement. But this is my most favorite piece because I get to be with you once again when it matters most. So this is a special bonus. There's a full year of access. So full year of this included with the sign up today. Now, you've seen video content, you've got written content in the form of checklists, but you also have signals. Here's the fourth dimension of learning. These are huge and special bonuses for those that love to read, but this is more so focused on the long-term investor. So what you're going to see today are more swing trades. So the average trading signal length is about 3 weeks. The signals I send out, if you add up all the days, it's about 3 weeks on average. But these special bonuses here are all about long-term investing. This is Titan traders for us are big hedge fund traders. The Warren Buffetts, Carl Icahns, Bill Ackman, and many others is where we've built these massive catalogs of data for you. And I love these. These are nice. You can print them out. You can make notes on them. But I wanted to make sure for those that really want to immerse themselves in content, I wanted to give those away too. So with everything here, you're talking over $14,000 in value. I mean, this is more than just a signal service, as you can see. In fact, to me, I like to play that as the least important feature, but I get why people like to follow my signals. But the total bonuses, everything accessible, we're able to provide to you for just $798. And this is for 12 months. But as I mentioned, don't go to the sign up page, because for those that are ready to go, I'm going to save the next 10. I'm going to save you $200 off that 12-month price of $798. And by going to the sign up page now, all you have to do is go to Rapid Profits, it's plural, methodplus.com. Type that in. It's going to redirect you to the special page. On that page, I want you to go to the coupon code, and I want you to type in RPM 200. It's on the screen, and that is going to knock off $200 off your 12-month plan. So instead of $798, which is a steal regardless, right? Remember, we're able to get to this number because we don't have a sales team. We don't have an army. I don't have a massive product team that's coming out with a new product every week. I have one approach. So we don't need an army to support that from a new product creation. And then I don't need to have a massive marketing budget. Those are three of the largest overhead items, cost of goods, that companies like mine have to cover, right? But we don't operate that way. I wanted to do things differently. So our goal is to work with those that have an interest. And in my stage of my career, we don't need thousands and thousands of dollars to provide the level of content that we have. So the $798 is unbelievable by itself, but I love to reward those that take action. And so for those first 10, you can save $200, and I'll show you how to do it. But when you type in rapidprofitmethodsplus.com, I'll send you the direct link. It's a simple redirect. Okay, so it'll take you to this page. Now you can read more about the strategy if you want, but this open enrollment period for this group expires in 3 days. I only host a couple of these events throughout the month, and so the reason is simple. In my training live sessions, I want to focus on the basic approach setup for the first several sessions. The only way to do that is if I have a starting block. I have a block of new people that enter the room at the same time. And so it makes it easier to transition a new group into my experienced traders, because I've got traders been with me for years. I have traders that have been with me for a few days, okay? But these open enrollment periods aren't evergreen. They're not always open. My store is not always open for new people because, again, it's all about experience. It's all about the client experience. And so I just, it makes it difficult to teach and coach when I have people starting at different starting points. I mean, if you've never taught anybody that, you know, hopefully you can appreciate it. But if you have, you definitely know how difficult that is. Imagine being a teacher at school, which many of you are or have been, right? And having a new first day every day, right? You've got new kids coming in every day, right? I mean, it's not effective or efficient, right? So that's why there is a definitive days of availability, because there's only so much, you know, we want to put around infrastructure and to keep the cost down. Okay, so when you're on this checkout page, you can read more about it if you like, but if you want to take advantage of the $200 savings, come down to click here to enroll. Now, we have a 30-day guarantee, and the guarantee is as straightforward as it's going to sound to you. All we ask is that if you're not satisfied, just tell me and tell the team within the first 30 days. No, there's no steps to complete. There's no criteria to check off. Okay, once again, I've been around a long time, and my former company used to have a laundry list, entire list of criteria, right? You had to do this, you had to do that, you had to jump through this hoop, you had to spin around in circle and on a bat and sprint to first base. I mean, there was just all of this had to be done for you to qualify to get your money back. And you can imagine, if you never lived through that, how frustrating that could be. So we don't do that. So it's purely time-based, because as you see with all the different bonuses, there's a lot of access. So you're going to see tons of live market analysis. You're going to see tons of trading signals. You're going to be able to read through tons of content, watch tons of videos well within 30 days. And at that point, you're going to know, usually within a first couple sessions, if this is for you, if it's resonating, if it's making sense. But if it's not, I learned a very long time ago that if things don't work out, and I remember my mother explaining this when I first started dating when I was a teenager, Matthew, if something never works out when you're dating someone else, you know, at a minimum, always make sure that you part as friends. And that's kept with me, part as friends. And so I treat my clients the same way. If it doesn't work out for some reason, you know, maybe it's not, it makes the sound of my voice, I don't know, whatever criteria that pushes you to want to get out, that's fine. Just let us know within the first 30 days and we'll part as friends. You don't have to even explain yourself. Just send it to our support, send it to our support hotline. You know, just tell us, hey, look, you know, life is getting in the way, or hey, it's not making sense. You know, whatever your reasoning is, all I ask is that you tell me within the first month. And if you do that, you'll get 100% of your money back. There's nothing to get upset about. You know, it's just, if it's for you, it's for you. If it's not, it's not. And, you know, that way, at the bare minimum, we can always, you know, part as friends. And that's something that stuck with me. But just wanted to let you know that, not that I think you will, but I want to let you know that you do have, you know, a parachute, we'll say. Now, once you're on the checkout page, just hit add to cart, and then that'll take you to the secure checkout. And you can see the lock, it's secure. If you click on the notice, it'll tell you your information is private when it's sent to this site. So passwords, credit cards, all the good stuff. Here's the program details, $7.98, all the different bonuses, the special bonuses here, the different reports that we have around the Titan investors I wanted to include. Yeah, basic, you know, membership creation, account setup here, you know, billing information, but the coupon code, okay, this is important. So in the coupon code, you want to type in RPM for rapid profit method, 200, and then click coupon code. Once you click that, you'll see this pop up that says coupon applied successfully to your order. When you see that, you'll see the $200 taken off. So there's a $7.98, less the $200 coupon, and there's your final price. Now you'll lock that in. So let's say you like this, I'm sure you will. Let's say you like this in 12 months, you want to keep it going. Well, you're going to lock in the $5.98. If you've seen this before, this price has gone up. Okay, so this is the best time to be starting with us. You know, several months ago, it was not easy to be in this market. We're now at a virtual point of massive shifts to this market. And when we talk about the latest recoveries from the last big bear, which was obviously the COVID shutdown, but you go beyond that, 2018, you go beyond that about 2014, you go beyond that, we're talking 07, 08, 09. Those recoveries is where we get it back. And we want to be at the point of spear when that happens. So now over the next 30 days, you have an opportunity with no risk in the first 30 days. All that's at risk is just time. But you know, if you're in here today, you're already devoting time to this market. My goal is to exceed your expectations. So $5.98, at that point, you're in and you're locked into this price point. This is an additional add-on. If you want more content, then we have this special bonus pack for $49. You can add this onto your order, and it's an amazing checklist. It's called the Titan Value Investors 4Bs. That is based upon Bill Ackman. So if you know who Bill Ackman is, but if you don't, he's a founder of Pershing Management Capital. He's got a very unique portfolio. He only has about 8 different unique stocks in his portfolio. They have about $1.5 billion or 2 billion assets, but it's very specific type of investments. It's definitely, he has an interesting approach. Someone like a Warren Buffett, they have like 50 stocks in their portfolio. But that's one of my most favorite checklists. I didn't even write it, but that's from Bill Ackman. Then you have Warren Buffett Investing Secrets. You have Sir John Templeton, if you know who those two are, I'm sure you do. And then a special momentum breakout video. Independently, we've sold these also on our websites, but for adding it on up front, this is also inclusive of your 30-day guarantee. But if you want to add it on, you just click it and it'll add to your order. It's optional. It's definitely an option if you want it or not. But if you do it now, at least it's covered under the guarantee. Okay, but any purchase today is covered, of course, but that's how simple it is. So what to expect with this is you're going to get an email, so you get an invoice receipt, and then you're going to start getting your member login. Your member login will have all the tools. You'll have the Empowerment Toolbox. You'll have access to the Market Pro Live Club. Next live session is Monday at 7, but I recommend you go watch today's archive, the one we had at 12 o'clock today, and that'll get you a huge jump up on getting ready for next week. Next week should be busy. We have CPI numbers, the inflation data coming out on Tuesday morning. We have retail sales coming out Wednesday. We have PPI coming out Thursday. So lots of data coming out. And then at that point, then we're into March, and into March's data that's coming out. And so there's plenty of volatility on the horizon here to really push and move these breakouts. This week has all been about retracing, which was anticipated on Monday night. And if you get enough on Thursday's archive, the one we had earlier today, then you'll be able to jump right over into watch Monday, and then you'll be able to see how we called this week Monday night, and then it'll make perfect sense on what we did in today's session. Yeah, really appreciate that, Mark. Love having you in the classes. It's definitely been a lot of help. Yeah, all the clients had so much. You know, we have an open group. We have a lively group of like-minded people, and that's why it's really fun for me, because I build relationships. You know, if there's something I don't know about a specific stock, maybe it's some, you know, latest headlines, or maybe it's a different ETF that, you know, someone brings to the room. There's been so much added value in my experience. It feels like there's a lot more, you know, value being brought because of all the new questions, right? We just had an open enrollment with another group, and, you know, added, you know, over 100 new people. And just the level of questions just adds to the room. And so that's why I really love these open enrollment periods, because I just know it's going to increase the overall knowledge depth of the room because of the different types of questions we get. And that's what makes it fun and interactive. And that's why we honestly go, well over 2 hours these days, because the rooms are interactive, great questions, great, stocks people pull up, and, they want additional analysis and they have a great idea. And then we break the idea down live, and you can see how the strategy is applied. So it's a lot of fun, especially getting up and going for the first, 2 sessions. A lot of it's going to be a lot of aha moments. There's gonna be a lot of wow moments, because what we talk about today, for example, in our class at 12, you're gonna be able to see that play out, that forecast. You'll see the price levels we call out, right? I diagram on the chart. This is what to expect with the movement. This is where the highest probable move is gonna be. And then come Monday night, you're gonna go, wow, Matt really called that. Well, it's not me calling it. I'm just reading the market. The market's telling us this. I'm basically your interpreter to the market. So Monday night, I anticipate a lot of enthusiasm and excitement ready, because we have a Tuesday, Wednesday, Thursday key market data coming out. And so that should give us some volatility that we haven't really seen here consistently over the last couple of days. But a lot of it's like almost a pause before the storm, right? It's a calm before the storm. But we're really able to identify it. So, and I get it, for those that are looking at this, that you're not sure, just think about this. If you're trading now, if you're actively trading in the market, $598 is less than your average trade. Majority of people that show up to an event like this are trading more than $598 a trade. When you make a trade, there's no guarantee, right? If you win that trade you place, do you have an ability to repeat it? You may or may not. If you're in a presentation like this, I'm assuming you really don't, right? But instead of trading your next trade, why don't you invest in this? Give me 30 days and I'll prove to you the old-fashioned way that this works, right? How do I prove it to you the old-fashioned way? Which is by proving it to you, right? By working with you. And if it doesn't work out, I'll give you your money back. Call your broker right now and ask for your money back on a trade. It's impossible, right? You can't do it. But for this, at least you have an opportunity. If you liked any piece of what I showed you, right? If anything clicked, if anything was like, oh, wow, I never thought about that before. If you have any of those moments that occurred throughout this event today, then imagine what the next 30 days has in store for you. And in my live sessions, there's none of this product walkthrough. There's none of the introduction, because you already know me. It's literally 2.5 hours worth of in the market analysis, in the market teaching, coaching, running markets, running charts, and using one strategy, one template. But you're able to see the market. I just love to hear the transitions that people have. It opens up your mind, and it really exasperates how simplistic the market can be if you can understand how to read the chart. And it doesn't require you to be a master chartist. I'm gonna, if you learned about trends today, I'm gonna teach you even more about them, right? If I talked about momentum, I only showed one piece of the spectrum, high volume. Low volume tells a story too. Talking about the different highs and lows, how to use different support and resistance, how to use different retracement models, how to forecast price using a grid model into the future. I only have so much time today. I don't wanna, make this feel like a fire hose, but I would say probably 10%, 15% of what we teach and how we use the template today is what I talked about today. I mean, really extremely, tip of the iceberg type of stuff. But that's why we have this guarantee, so you can actually get in and see what it's like from being an active participant. But hey, it's up to, once again, I'm humble enough to know I can't help everyone, though I try to. And that's all our team here can really do, is just try our best, right? I mean, no one's perfect. There's no absolutes in trading. There's no absolutes in life. There's no absolutes in love. So if we can acknowledge that, then all we have is the ability to do the best we can. And I'm confident that you'll see that play out for you, but you've got to be able to pull the trigger. And this is one way here today to test your theory of, can you actually pull the trigger when you need to? I have the knowledge and the experience to know that I can help. I clearly am humble enough to know that you may not know that yet. But once again, that's why we try to make this affordable, number one, in specific business decisions that we've made to keep this overhead low so we can pass on this type of low price to you. And number two, we've got an out with a guarantee, and it's literally the most simple. If you want to try it, then buy it in a couple of days, test this. Hey, I want money back. See how fast you get it, right? I mean, some people have done that because they've been burned in the past, and I know it, right? Not everyone needs to go to that level, that degree. It does charge us money, but hey, if that's ultimately a fear point for you, then put us to test, right? I mean, people have done some interesting things to try to test the validity of a company, and has been one in the past. But if you don't need to do it, please don't do that, because it does impact our merchant process. But it's just some people have to go through different lengths of belief, and it's definitely happened. And they go, oh, thank you for getting my money back. All right, can I sign back up? Hey, that's what happens when I've done this so long and work with so many different types of people. You get different types of experiences. But it's definitely been a pleasure. But I do have to wrap up. Once again, I talked about this. I've got to get the trades out to my clients, and as I mentioned, I have to go pick up my daughter from cheerleading practice. So that's why I do what I do. That's how I schedule my trading and built this method, is around my lifestyle to be an active father. And I've got to go to get my father's duties done for the day. I've only got about 40 minutes to go pick her up, so I've got to get the trades out. If you're signing up now, tonight will be your first trade. You already know what it is. There may be a couple more that go out, but at least one of them is Halliburton, and that's going to be hitting the email and text messages of my clients here in the next half hour. So I got to go get that done, get that out, so my clients can be set up for tomorrow. And at this point, I'll leave the question section open. If you have any questions, Kim is helping me moderate the event. She's been corresponding with many of you I see already. She's phenomenal, does a fantastic job. Clients really love her attention to detail and her support. So if you have any questions, if you're having issues signing up, that's fine. Let us know. We're here. I put the contact information on the screen, so you also have that. But once again, I'll say, I see some questions coming back and forth and having. Oh, looks like Alan's here too. That's awesome. So Alan logged in too. He's my business partner. We roll up our sleeves, as you can see, so that way we can once again keep these costs appropriate and affordable. So we get our nose to the grindstone. We roll up our sleeves, and we're here with you, shoulder to shoulder. So that's the type of experience you can expect with us. But at this point, once again, I'll leave everything open. So feel free for signing up. Or maybe the traffic's busy on the site. Maybe it's not going through, or it's spinning. That's simply a symptom of a lot of people hitting the page at once. So just let us know if you're signing up and there's any difficulties, and my team can call and support. Just give us your number, email address, whatever have you, and we'll get you all taken care of. So appreciate you all. Happy trading. Looking forward to working with you all, and looking forward to having this group, the new signups, join us Monday night at 7. So you'll get all the emails, all the registrations, all automatic. So that'll be taken care of you. And if you want to get a leg up, go watch Thursday's archive. It's in the membership area of the Market Pro Life Club. Get a jump on Monday by watching today's recorded session, and then you'll start hitting the ground running come Monday night, and you'll get a full 2 days worth. So you have signals tonight, then you have signals again Sunday night. Okay, so signals tonight plus signals Sunday, and then you'll be with me live Monday. Okay, so it's been a pleasure once again. Thank you for all the questions. Really appreciate it. And as always, happy trading.